What's up, everybody? So I am focusing on the next important level for Bitcoin to break out above, which is the weekly supply zone at $48,802.58. Now that is Coinbase's data feed, and the price may vary depending on which exchange you are looking at. It is simply the close of this August 23rd bearish candle. Now it is a weekly, so tomorrow's close will be vital into sending us into next week. The technicals on Bitcoin are bullish. The bulls are firmly in control of price on the weekly and daily time frames. All moving averages are below price and the RSI is above the 50. So as long as there isn't any high risk news events, I think Bitcoin could potentially break out and start moving higher, which is what everybody wants. Now for the bearish things to look for. Although everything is bullish as far as technicals go, we do still have some potential bearish things ahead of us. One being the interest rate hikes. I know they have not happened yet, but if you look at the DXY, you can see that it is also bullish. It is possible for the dollar to trade higher as well as Bitcoin. It just gets me thinking. Now, this is purely speculative because I have no proof, but just by watching price with the overall fundamental themes, it could be that investors are building bullish positions on the dollar ahead of the interest rate hikes. Now, I do know that the Fed is unlikely to be able to sustain that because it would cause a risk-off environment. Still, price is moving up. The S&P index also seen a decline last week down to the 50 exponential moving average. This has been an area that buyers have stepped up in the past, so one could say that we're just seeing a pullback and buyers will step up again. This has been the place to do this. The DXY is also at monthly resistance, and we will know if it is a breakout or not by the time this thing closes in just 12 days. So we do have time. The 2-week chart is what has me a bit concerned. As I discussed this already, I need to bring it up again because most retail traders have short-term memory loss. Just kidding. Just kidding. The 2-week pattern I spoke of last week is the bearish outside candle that occurred here on August 30th. The prior bullish candle traded up into a 2-week supply zone and then wha-bam, we seen a downside 2-week close. It did not close below the previous candle's low, so it wasn't an extreme sign of weakness, but the highs and lows were both taken out. Now what I said last week is that this week we could see it trade all the way back up to 48,802.58, as that is going to be 2-week resistance. It is also weekly supply and 2-week supply, so it is a huge level of price. I'll throw that video up here in the right hand corner if you want to go and check me out on that, and the timestamp to look at is 149. And as you can see, price is doing that right now, trading all the way back up into that level. So until we get at least a weekly close above this price, I will remain neutral to bearish. A close above that would be better, as long as that does not turn into another trap, because they do exist. As of right now, we are trading as an inside weekly and as an inside 2-week candle, so it is consolidation. The next big bearish thing is the infrastructure bill, and it could be something on the horizon that could hurt cryptocurrencies. I'm not going to go into detail about this bill because on this channel we mainly focus on the technicals. However, to briefly explain why you should research this if you haven't already, is because the bill is supposed to be for bridges, roads, and a bunch of other quote unquote US infrastructure. The Treasury Secretary Janet Yellen slipped in a part of the bill that requires loosely defined cryptocurrency brokers to collect KYC from all of their users for tax purposes. Now the bill itself is in its final stages, but it will not come to pass until at least September the 20th, because that's when the politicians come back from their summer slumber party. I have put a link to a video that goes in depth on this topic, as well as the topic of the SEC gunning for DeFi projects. I must ask that you please stick around until the end of this video before you go check out the other channel's video, because YouTube's algo mainly focuses on watch time. So thank you for that. So with a possible interest rate hike and this multi-trillion-dollar spending bill, I ask you to please remain cautious. These are two things that could send Bitcoin and other crypto assets to come crashing down. And we will know what the skinny is on both of these things after the September 22nd FOMC rate decision. And according to the website The Hill, the House Majority Leader Steny Hoyer affirmed the chamber will vote on the $3.5 trillion spending package, also known as our children's future, on September September the 27th. Another play that we could watch for these important incoming weeks is the USD JPY. If the hike happens, and that is a big full-sized if, we can look to capitalize on long the USD JPY pair. The technicals on this asset are bullish. You can see that price is indeed wedging up, which is good for a big potential move to the upside. All of the exponential moving averages are below price, and the RSI has just peaked back above the 50 spot. So this pair will indeed be on the watch list for the next couple of weeks. Now, the reason I like this pair better for this play is because the Japanese yen interest rates are still below zero, and our interest rates are above zero. A hike would widen that gap, and that may be just enough of a carry trade to generate alpha for the big hedge funds. Either way, it seems like we could see positive inflows of capital into that pair. Now, I have already started to move in this direction by shorting the pound dollar as well as the euro USD. Both of those trades have already been extremely profitable, so of course I did take profits on both, but I still have a decent sized position. So moving on into the week, I will be looking for a long entry on the USD JPY. Hope you enjoyed the vid. If you did, please make sure to crush that like button. Also, go ahead and subscribe. Don't forget to turn on the notifications so that way when I go live or drop nuggets like these, you will get that alert. Make sure you trade safe, trade smart, and as always, happy trading, everybody.